Guys, if you could take your seat, we're going to get going in a moment. Awesome. Okay, this is so good. The power of a microphone. There's no assigned seats. You could sit wherever, whatever works. So this is not the cash panel. The cash panel is behind me if you've made a mistake. This is our innovation panel. I think what we're trying to capture really is for CFOs, you heard it this morning, is just how important technology is to our day-to-day businesses and how do we integrate it. Each one of these CFOs has such an interesting perspective, and I'm just excited to hear what they have to say. So take it away.
Awesome. Well, good morning, everybody. Thank you for joining us. My name is Ksenia Kaladuk. I'm a partner with McKinsey. I do a lot of my work at the intersection of energy and corporate finance, and I'll be the moderator for this session. I am joined by Dennis Fair, Matt Skarupa, Saloni Varna, and Mona Lisa Schroff. I'll let each of them introduce themselves briefly, and I'll give a bit of a prompt. We'll spend about 30, 45 minutes on some questions that we've sort of prepared to have a dialogue around, and then we'll open it up to Q&A. So if you have questions that you're excited to ask, write them down, keep them, and we'll get to them toward the end of the session. But without further ado, let me open it up to you guys just to give us a brief introduction. Tell us where you're coming from, give us a few perspectives on sort of what the role of the CFO means to you, and we'll get into that innovation angle shortly. So if there's any opening thoughts you want to give on that, that'd be great too. Dennis, you want to start?
Yeah, sure. Also, good morning, everyone, from my side. Dennis Fair, Chief Financial Officer of 6K. Maybe a few words on the company. We use a ball of sun for materials processing. That's a microwave-based plasma. So we strike a plasma, 6,000 degree Kelvin. We stretch it into a production zone, and we process battery materials and metal 3D powders, for example, for medical implants. Myself, in that role for about a year, started my career in Siemens, worked there for more than a decade, various finance functions across the globe, had then the opportunity to carve out a team of energy storage people, spin that off, became founding CFO, company called Fluence Energy storage integrator, helped that company to grow to more than $1 billion in revenue in 5 years, and took it public through a traditional IPO in 21. Perspective on the CFO, for me it's really a lot about partnership. Be a good partner to the CEO, be a good partner to the business, and really help bringing the finance voice to the table and drive together with the CEO the results of the company. And certainly there's a stewardship aspect as well, but I think it's all about being that partner.
Awesome. Matt?
That's great, yeah. It's tough to follow someone who describes their business as stretching a ball of the sun into a plasma. We use a green owl that does funny dances on TikTok to bring language learning to the masses. So I'm the CFO of Duolingo, and our mission is to make the best education in the world and make it universally available. And we do that primarily right now through language learning. And so I'd encourage you all to download Duolingo and start Spanish or French or something. And we have about 80 million monthly active users, more than 24 million daily active users. Our app is used, we have a freemium model, so you can use our app for free, which means that recently resettled refugees use it, and some of the richest people in the world use it as well. So it's got a broad user base, and we grow it mainly organically by penetrating the cultural moments and having people talk about it and liking it and telling their friends and family. And also we really do have a green owl that does some crazy things on TikTok, which is helpful. I joined in 2020, right before the pandemic started. We went public in 2021. And before Duolingo, I was at Goldman Sachs and KKR, and I started my career as a management consultant at Bain & Company. What is the evolving role of the CFO? To me, it's really, I have a really good friend and mentor who on his desk has a placard that says "Bring Joy," and his job is to bring joy to his organization. I wish I could have that placard. I'm often envious of him. I'm like, I want that placard. Maybe if I just get it and put it there, people would believe it. I think my placard would say, if I had one, bring clarity. I think the role of the CFO is you can bring strategic clarity, you can bring capital allocation clarity, you can bring all sorts of clarity, but in the meetings you're in the investor conversations, and really the wide range of activities you're engaged in, your job is to be crystal clear about goals, resources, plans, where you're going. So that's what I would say.
So in order to use the language app, I think all of us need to be healthy, and that is where I am the CFO of Thorn Health Tech. What we do is we provide personalized solutions targeting health and wellness of various individuals and consumers. So it starts with testing. We have 11 types of test kits, starting with gut health, brain health, and based on the results that you get, we provide personalized solutions in terms of vitamins, minerals, and supplements. So I am Saloni, sorry, I should have started with that. Saloni Verma, CFO of Thorn Health Tech, joined the company in 2021, went public around the same time that Duolingo went. I joined as a board member and a chair of the audit committee. And earlier this year, I took on an operating role as the CFO. The company decided to go private this summer, so just finished off a transaction, and we can talk a little bit more about that later on. My background is, prior to this, I was a CFO of 2 startups, so it was a very interesting transition. And prior to that, I was in the consumer health tech space, both Chobani, Unilever, big companies, and high growth companies. 2 lives prior to being in the corporate world. One is an investment banker. I was with UBS doing M&A for 5 years, 3 in New York, 2 in Tokyo, and then originally from India, chartered accountant, was with KPMG in audit for 6 years. So my perspective, I think I'm not going to repeat. I pretty much echo everything both Dennis and Matt have said. The one interesting change that I've noticed in CFO roles over the years, and what I try to balance a lot, is taking care of stakeholders. So I think historically we have always focused so much on shareholders and capital management, and having that as a point of view for CFO, what is our return to just investors? I think we have seen this in various forms, whether you call it ESG, other areas of the business, but I think CFOs now have a role to a lot more stakeholders than just shareholders. So you think about your consumers, you think about your suppliers and vendors, you think about employees, you think about the society at large. So to Matt's point, when you're talking about clarity, what are our KPI and scorecards for all of them, and how do we embrace everybody as we go on this journey, I think is extremely critical as we think about the evolving role of a CFO. It's off to you.
All right. Thanks, Saloni. Hi, everyone. My name is Mona Lisa Shroff. I'm the CFO at Freight Farms. I joined there in August of 2021, so been there about 2.5 years. When Kathy reached out to me to be on this panel, I was really excited to talk about innovation, because Freight Farms, just so you guys know, we are a world leader in the vertical farming space, and we are at the forefront of driving innovation in a sector that has a very strong sustainability and ESG focus. So innovation is at the core of what we do, so I'm excited to talk to you guys about it. Before Freight Farms, I was a CFO at a few startups, and prior to that, I started my career in direct-to-consumer, publishing, consumer goods, working at very large and smaller organizations, before I decided I like working at startups. And we are actually in the process of taking our company public in the Canadian Stock Exchange, so we'll be sharing a little bit more about that with you guys as well. And talking about healthy food and apps, our mission is to bring hyper-local food to communities everywhere. You can grow food in our container farms and put them anywhere, in the deserts of the Middle East or in the very cold areas of Scandinavia where you can't grow food. So that's what we do. In terms of the CFO role, I echo what my colleagues here have said. I do feel over the past few years, I think Joe from Johnson & Johnson touched on it this morning as well. The CEO has always been the cheerleader of the company and has to be always. The CFO has to become a partner standing neck to neck with the CEO and be an effective communicator. I think that has become super important. And as Saloni mentioned, to all stakeholders, not just investors and board members, internal and external stakeholders. I feel like that has become extremely important and apparent over the last few years.
Excellent. So many directions we can go with this. And again, save some questions if some of this kind of sparks ideas for you or sort of directions that you'd like to go as well. One thing each of you hit on that I think would warrant some additional exploration is just this idea of where are resources coming from, especially if you're in a company that's driving innovation and that maybe is taking bigger bets or more risky bets into new areas of development. And so this public-private divide is something you've all talked about. Are you sitting in an IPO situation? Are you choosing to stay private, go public? How do you do it? I think this would be a really fruitful area for us to get into a bit. So in no particular order, give us a little bit of the flavor for how maybe your current organization is thinking about it, and what leadership have you brought to making that choice, right? When is it the right time to open yourself up to capital markets? How do you make that trade-off? What do you think about?
I'm happy to jump in. Well, I mean, the first thing to just say is that, we're talking to a room full of CFOs, and so, the best I can hope to do is maybe spur a thought or jog a memory versus kind of come up with something original. So with that proviso, the way we talked about it when we started to go public was that if you want to build a durable business, a business that produces lots and lots of cash over a long period of time, that was our definition. At some point you're going to be a public company. And so it was less around the idea of going public. It was more of an idea about when is the right time to become public. Mm-hmm. And that was the framework that we used that I think was helpful for us in our context. But the other thing that we say a lot internally on our team is that context is what you're good at. So for us, it was in July of 2021. That was a phenomenal time to access the capital markets. Looking back a couple years past, it might have been the best time to access the public markets in a couple decades. And so in that context, how you go public, what story you tell, and the alignment you're able to gain with shareholders, future shareholders, current shareholders, et cetera, was a lot, quite frankly, easier than it is today. And so anyway, the only other thing I'd highlight is that context definitely matters as you're doing it. The final thing I'll say, when you talk about resources, we found, and I don't hear this very often said otherwise, which maybe it just means it's not true and I'm just making it up, but I found that as we were going public, it was a great moment in time when people are really excited about something. I mean, this is this big marquee event for the company. And as you're talking about aligning the organization around your strategy and your capital allocation plans and what specifically is likely to happen in the near term after you go public, it was just an amazing forcing function to get people in a positive way, very excited, to tackle harder things, to tackle decisions that maybe had lingered for a while. We weren't really aligned on. We had service level alignment. This was a chance to really drive the organization to that alignment and then re-energize everyone around the mission and how the business and the mission relate to one another, which I think also helps driving our capital allocation process. So those are a couple thoughts to get us started.
Sure.
I can build on that. So I think one of the key things that Matt mentioned was context. And Thorn went public in August 2021, pretty much the next month after, which I think all of us are aware was probably the last window to go public in terms of the context that we are living in today right now. we decided to go private this year earlier, and to all the points that Matt mentioned, what is the right time to going public? Context is so much relevant, and the story that you want to say, and ensuring that the investors and we as CFOs deal a lot with analysts, buy side, sell side analysts, and who is writing those equity research reports, and do they really understand what you stand for, and are they communicating that to the world at large is extremely important. And I think that was one of the big areas of challenges that Thorn had, where we continue to invest in the long-term health of consumers, and COVID did show that. Preventive care is extremely important, and there were choices that we were making in investing in areas which would not have immediate short-term returns. And it just became a challenge to communicate that story and provide that context in a way that the analyst could incorporate into their models. And so it almost became that we are a VMS company, and started comping us against companies in a space that we didn't really belong. And so finding the right partner for us, which truly recognized our value in helping us invest in the long term, right? To Matt mentioned, we all want to make cash, and we will make cash. But having that time and the bandwidth to invest in building your infrastructure, products, and finding a partner that can invest in that. So for us, it was L Catterton. We went private with them earlier this year. Was the right decision for us in terms of why we chose to go back from public to private.
I can add a slightly different perspective, because we are going public through a SPAC process. And I'm sure everybody hears the word SPAC and like, oh my God. When I started at Freight Farms in August of 2021, we were considering a SPAC, going public through a SPAC process in the US. And we all know what happened to SPACs in the US. So we sort of abandoned that idea. We took this opportunity again now through a sponsor that is listed in Canada. So we're doing a listing with a sponsor listing on the Toronto Stock Exchange. And our decision was driven by really two things. One, of course, liquidity, access to capital markets is important. The second is our sponsor brought, is the right strategic partner for us to sort of help grow our business and take it to the next level, both in terms of capital, connections, all of that. So that is really what sort of drove our decision. And I can definitely agree with what Saloni said. We are in the controlled environment agriculture space. If you read about all the other players in this space, the Aero Farms, the Boweries, the App Harvest, nobody's doing well. Why would we consider going public in this environment? Well, guess what? We are a technology provider. We are not a grower. We are completely differentiated from everybody else in that space, and making sure that the analysts actually understand that and communicate that effectively is super important. And I think I'm going to let Matt give his words of wisdom that he told us when we talked about this, but that's super important as we're thinking about the going public process. Matt, I'll turn it over to you to share your words of wisdom.
Thanks. No, that's very kind of you not to just say the line. I appreciate that. When we were going public, someone wise told me, as we were trying to pick, you're trying to figure out which banks you want to have engage in your process and how that's going to go. They said, don't be confused. You date your relationship banker, but you marry your analysts. So that relationship has to be really strong. It has to be foundational. They have to really get you. And I think that's true to what both of you have said, is that when the analysts, they're going to be with you well past IPO. And so how deeply do they truly understand the story? Do they understand the market, your differentiation, the core economic drivers of your business? It's critical, absolutely.
I think that's especially a challenge if you do something really new. Like when we went public at Fluence Energy, we've been like the first in the space to go public. So there's, first of all, there's no peer comparison. And then you have analysts coming from different angles. Okay, it's energy transition, but then they come maybe from a utility play, or maybe some of them come from an energy play. And maybe the next guy comes from infrastructure side. So you have all these different kind of analysts who you really need to spend a lot of time to educate, especially when they're, I think, during their first 12 months, I would say. And I would really counsel not to underestimate that. Because understanding the story and really what makes you as a company, and maybe also where your future potential lies, a little bit, maybe segueing a little bit to the innovation piece here, like where could additional innovation come, where could additional revenue streams and potential for the company come down the road. That's really a tough thing to understand for them. And in that regard, I think approaching it with this topic, yes, hey, you're married here. And we heard some good, let's say, speeches this morning in regards to like how do you manage your relationships, right? So really think it in along these lines.
Maybe just to tie a few things together, Saloni, you mentioned earlier the importance of sort of communications writ large. All of you are touching on the analyst angle. How do you see the role of the CFO in actually communicating what does come next, right? Or where the innovation is going? Because you're not the only storyteller in the organization, but what's your role and how do you work with others inside your organization to target specific stakeholders, bring a particular angle to bear? What would you say about that? Dennis, maybe we can start with you.
Yeah, thanks. I would say really make it a decisive piece of your story. And I maybe just quickly looking at company everyone here knows, if you think about Tesla, probably has a stock price today of low 200s or so. Probably only $80 to $90 of the $220 is really coming, valuation is coming from its car business. The rest of the valuation is coming from where they may be going in the future. So now, of course, you can say, hey, Tesla is an extreme example, and probably it is. But I think it shows you the power which you have to use innovation and new business areas to really drive your multiple. And I think very often as CFOs, we might be pushed into the direction, or maybe as our nature to think when we look at true innovations and not kind of incremental product development, to think about like cash flow based metrics, IRRs, NPVs, whatever. I think I would really encourage that view when we look as a CFO truly about innovation, to take the multiple, the shareholder value creation in a much larger proportion into it, and then make it part of your story, to really describe it as an incremental part, to say, hey, here is an additional area which may yield very attractive cash flows in the future. As an example, just that you have a bit of a reference in Fluence energy storage system integrator, mainly hardware sales, some attached services to it. These are like the main revenue streams. But then we said, let's create Fluence Digital, add an kind of AI-powered tool offering on top, software as a service type of revenue stream, and really create this additional narrative of like, this company has additional room to grow in terms of innovation and white space to go. And I think just recently, was already after I exited there, I saw in Seeking Alpha, one of the contributors there was writing Fluence energy storage company powered with AI tools or loaded with AI tools. That was exactly the narrative which we have been trying to push. Mm-hmm. And we did get that additional multiple on top of it. Some of the analysts, they took also like a sum of the part approach, so we could really see it in their valuation, and was basically in some cases up to $1 billion of additional valuation just by creating that additional narrative. And therefore I would really encourage everyone that very often we're coming back to this cash-based metrics when we evaluate, but if it's a true innovation, go for the shareholder value creation piece.
Great. Other thoughts?
Yeah, I'm happy to add to that. I think you covered quite a bit of it, Dennis. But this goes back to the first thing when we were talking about what's the role of a CFO and how we are a strategic business partner to the organization, right? We think majority of us go through this annual budgeting process where you're trying to figure out what the next year holds for you. And this is one of those few months, assuming calendar years. and there are multiple ideas thrown on the table, and this is where you start balancing, your short-term targets versus your long-term targets. Do you invest in next year's brand and marketing campaign, or do you want to hire more people, or do you want to expand into a new channel, a new geography? But also being cognizant of what is it as a company that we want to achieve 3 years from today, right? 5 years from today, and who do we want to stand for? Those various strategic goals need resources. We can all talk about, we were at a different discussion, me and Matt actually last week, where AI is extremely critical, but that takes resources, and who is writing that check, and how are we providing the cost-benefit analysis on that we need to make this investment, because 3 years from today, 5 years from today, it's going to lead to these benefits. So I think that is where communication, to your point, Ksenia, is whatever goals we as a company decide from a long-term perspective. And at Thorn, one of the big bets that we took was on a one blood draw device. It's still pending FDA approval, but 3 years ago we decided to revolutionize how consumers do blood testing, and how we can make life easier for both healthcare practitioners and for consumers. It's still pending FDA approval. It was a long drawn process, but it was an investment that the company was willing to make. And communicating that story, when you talk to analysts, it all boils down to, what is the market size? How much will you capture out of this? What is your revenue stream, and where will you make the money? But as a CFO, connecting those dots between what your company wants to do versus what the investor or the street or the analyst wants is extremely critical. And marrying that, yes, we are focused on the short term while continuing to invest for the long term, requires succinct communication and trying to explain that in a way that they will give value. We're trying to get $1 billion for blood draw, but we'll see how that goes.
And just to add a little bit to Ksenia's question about the role of the CFO to kind of build on what Saloni just said, I often think of my role as the chief juggling officer. We just filed our prospectus on Friday. And you guys all know a prospectus is a few 100-page document, and many stakeholders, the bankers, want to use it as a marketing document. The lawyers are breathing down my neck about things you can and cannot say. And the CFO is the quarterback in that process. So I feel like a lot of it, building on what Saloni said, we're always juggling priorities, whether it's resource allocation or what can and can't we say, what should be communicated to the street, to stakeholders. That has become, so I think about the CFO role as a shaper, not so much as a creator. We're shaping strategy. We're sort of the quarterback that's sort of driving the organization. We're not necessarily the ones creating the strategy, but we're shaping it. I just wanted to add that piece.
If you're juggling, it seems like you're bringing joy to the masses.
You know what? There you go.
I just had this image of Mona Lisa. Like, sounds great.
A lot of balls in the air.
Yes, yes. Maybe there's another place we can go then. I think, Mona Lisa, you mentioned a little while ago sort of the partnership with the CEO and how the role of the CFO and the role of the CEO need to coexist. I take your point on shaping strategy, but there is sort of this more immediate question of, between capital, human, and R&D resources. If you're really innovating, every day you're making trade-offs. And I would love to hear, I think we all would, a little bit about what is the relationship between you and the other decision makers in the organization, and how much of it is, you're bringing the facts versus making the choices versus, shaping the narrative that comes out of that. What works, maybe what hasn't worked, if you're willing to share some of that, I think that'd be a great angle.
Who wants to start?
Anyone?
Yeah, I'm happy to start. I'll actually take it to tie the last two questions actually together with that one, which is, we talked about going public. One of the things that didn't come up that relates to how the other stakeholders or the CEO and the CFO relate to one another that I found, and I'm sure some of you have found as well, is that investors are amazing at sussing out misalignment between the CEO and the CFO. Like uncanny, in my opinion, about how they can pick up on a word choice or a body, a shrug or a grimace. A grimace is pretty obvious, I guess. And so one of the things that I found as we were in public was that, as Luis, our CEO and founder, was communicating the story, my job is to get aligned with him, not the other way around, and then to put in place kind of his genius, and he's a very charismatic and charming and amazing guy who's built a great business, trying to put an investor framework around it so that they could start to, almost like populating Ksenia's from McKinsey, populating a 9-box with examples, if you will. And so what I'm saying there is not to fake it. I'm saying that I think it's hard to fake it. And so what I found was that, like, if you have to do that hard work of getting aligned or not, you do that beforehand. And then the other thing we found effective was just saying that we disagreed about something, which I think surprised investors, which was like, yeah, Luis sees it this way. I tend to see it a different way. He wins, right? This isn't a democracy. He's the guy. But I think if you're kind of like trying to shade that and act as if there's no disagreement when there really is one, I don't know. It's not been my experience. I think investors can suss that out. And then back to the innovation point, I don't know if I'm the only one in a founder-led business right now, but at a founder-led business, the innovation really does come, at least in our business, from the founder. We have co-founders who are both really focused on innovation. That's what gets them up in the morning. And what we have found, and what I have been amazed at, is that the topic of communication with investors is, for us, as much about our culture and the infrastructure we built as it is about any one particular element. And so just to give you an example, we have said in our shareholder letters, our press releases, and our earnings calls, the term A/B testing way more than I think is advisable. Like, it's just, what is that term? Please define it for me. Is there a glossary in your earnings letter? But we say it because that's the word we use internally. And so we've just kept repeating it. We said they will eventually grok what we mean. And we're doing that because that is our culture. Our culture is we test everything. Like, we change the one word on one screen, we're testing it. And so the reason I bring that back to the CFO conversation is, if that really is in the water, if that is your infrastructure, if that is your culture of innovation, how do you translate that to a room like this so that people are saying, well, what's this guy talking about A/B testing? What's the framework that you're going to put around that says innovation to us means X, here's examples of X, and keep coming back to it? Not that I'm driving innovation, I'm not. I'm trying to get out of the way, but how do I communicate that? How do I put a framework around it and then populate the framework?
Love it. Other thoughts?
I think what slightly different to what Matt said, but building on it. CFOs, when we think about the roles that we have, one of the key things is, I think a lot of people have said, the CEO is the cheerleader. The CEO creates the strategy. And they are always, or at a founder-led company with a CEO, they're bubbling with ideas, right? Like, I've yet to meet either a founder or a CEO who wouldn't like to do like 20 things at any given point in time. And the thing is, CFOs, you do have to wear this hat where you're supportive, but you're also challenging at the same time. It's in our nature as fiduciary roles, responsibilities to always do a risk-weighted assessment, right? Like, we are always cautious to the point where, usually majority of the times we have made the bad guys in the room. The CFO did not allow us to do this, doesn't have the resources to do this. And so sort of keeping that balance, while you are being objective about all the ideas, about all the avenues of growth that a company would like to take on, but at the same time sort of having a conversation which puts the pros and cons in a way that does not completely sap the energy out of the room is extremely critical. And I think what I have found to be effective is having those conversations one-on-one. When you are in big rooms and big group meetings, I think challenging an idea is always, and especially coming from a CFO, I've seen it's construed to be not supportive versus being more objective. And I think it's been a learning curve for me where you hold yourself at that moment in time, and then you have a discussion to explain where you are coming from and provide your point of view. I don't think I've ever been with an investor where I've tried to disagree with a CEO, so I'm going to try that next time. But I think for me, I have been, I try and challenge other people in the room. I just try to do it behind the door, because I think once you open the door, you want to come across as one team behind the idea. To your point, the CEO tells a story, and it's your job to decide the story, and then it's your job to explain it to the investors. So that's one thing that I've learned over the course of time.
Disagree and commit. That's
Okay.
I'll
keep that.
I think also I agree with everything Matt and Saloni said. The only piece I would add is transparency. I think, to the CEO-CFO relationship, I think transparency is key, and taking a data-driven approach is what I've always felt worked in my career. Whenever there is, possibly there is something that you need to disagree, taking a data-driven approach to where you're coming from always helps in that relationship.
Yeah. Dennis, I know you have a unique perspective on the kind of R&D allocation angle, and how early, how big a bet to make, how to sort of justify that. How to work with your CEO, I suppose, but then how to justify that to sort of the community. Can you say a little bit about that as well?
Sure, I already talked a bit about that. Let's think about it from a shareholder value perspective. And maybe the other angle I want to bring it into that, if you really want to be successful along these lines, I truly believe that if you have something, what is really the true innovation, and not just like incremental product development, I think you need to carve it out of the existing organization. It will never work if you keep it in your business unit XYZ, because at the end, executives, even though they may have options and they may have RSUs whatsoever, they're very often focused on their key metrics, what they're incentivized on a cash basis. It's really like sometimes like a mental stick somewhere sitting in their brains. And that means they will look at these opportunities from their typical whatever EPS, cash flow, whatever kind of metrics there might be out there view, and it might be very hard for them to really look at one part of the business and say, okay, I steer this by cash flows and by EPS, and I steer the other part of the business based on shareholder value creation, especially if they do not have day-to-day interaction with investors or with the public market. If they do have that, it may be much easier because they get this direct feedback. So what we have done in 6K is today we have two divisions, operating division, 6K energy, battery materials, and 6K additive for the metal 3D powders. We created a separate organization called 6K Next. That's where we really bundle our innovation potential. And that's where we basically also drive the organization from the shareholder value creation perspective versus the other two divisions. You follow them more through your typical kind of KPI metrics, and you manage the organization on that basis. And it's really, for me, very fascinating often to see how different the people react and how they also differently act. The other advantage of carving it out, it also helps you, in the storytelling, that you can really clearly describe it when you talk with investors or with other stakeholders about where is your innovation potential. You can clearly talk about, hey, here's 6K Next, we're taking the existing technology and we're innovating, we're going into very different fields of creating revenue in the future. And along these lines, I think creating this organizational separation, it also helps you to clearly define like what is your cost structure, what is your expense structure. You will very often get this question, okay, how much are you going to invest into there? You don't want to go into like 3 parts of your organization and start pulling out the numbers and tying them up. You can do that, but it feels very tedious. So really create it very focused, tie together the story also was about like how much are you going to invest in that area, and it can be you probably will not want to break that out in like a segment type of reporting. It's much too early a stage for that, but you can work with metrics like I'm investing X% of my income or X% of my revenue or cash flow, or we are still a bit earlier in the whole process. So I just say I have a handful of people off there. Everyone understands what that means in terms of kind of what type of investments which you're doing there. Very well defined, very clearly easy to communicate. And again, very important is that kind of managing with very different KPIs.
Yeah. Anything you guys would add? I see emphatic nods on the R&D angle.
No, I think it goes very well back to what Dennis originally mentioned, the communication part of it, right? It links very well like to the story that we want to tell our analysts, and ensuring that every form of growth is not evaluated on the same metric, right? Like it's not always about EBITDA margins, it's not always about cash flows, it could be investing for the future. But helping communicate that story is just so critical, because otherwise, to Matt's point, if you have to marry your analyst. If your analyst doesn't get it, it's going to be difficult for them to translate it to potential investors in the future.
And I'll just add that, having worked with businesses at a lot of different scales, I think even if you're quite large, that carving out can bring an angle of, I guess, believability to investors or to analysts, because they see a separate focus, maybe a different culture associated with that next thing, which, I don't know, I think it can get a little bit muddy, so it works at every scale, it feels like. I might ask one more question, and then we'll open it up for Q&A. What happens when you have to pivot? So how do you go about, that's a huge part of what it means to be innovative as a company. What happens, and have you seen sort of a pivot in strategy and rapid reallocation of resources? What's your role in that? What advice would you have for other practitioners, or what have you seen not work well potentially?
I can start. I think for us, as I mentioned before, innovation is at the core of sort of what we do, because we're in an industry that is new and growing and developing. And we are constantly innovating not just our technology, which is important, that's our product, but we also have to pivot the organization accordingly. So for example, in our business, our end consumers' economics is super important. I was talking to another CFO at dinner yesterday, and he said, wow, your business sounds really cool. Do your customers make money? Right? I was like, you know what? That's a really great question. And that is super important for us, because if our customers' economics don't work, we're out of business. And so as a CFO, we had to make that pivot. We talk a lot about the innovation group and R&D and product and technology, super important. But we had to set up a customer success team that is actually part of my organization, whose sole job is to make sure that our customers' unit economics are profitable. So again, the innovation can take many different forms. And I think as a CFO, we are shaping that strategy depending on what the organization needs.
It's a great example.
I would get it back to what we have spoken to, clarity and communication, right? Like when you pivot, why are you doing the pivot? And what was the objective of what you did before? This is not in my current company, but in one of my past companies, they made a big bet on change in packaging. And there was a belief that the new packaging is going to be attractive on the shelf and it will lead consumers. And there was a belief that we could make it an individual brand bigger than the parent brand. And it did backfire. The numbers did not work out, and the volumes at retail indicated that one of the best-selling SKUs was actually going through a huge decline. And we had to get back to the original packaging, where the parent brand we realized was so much bigger, had bigger brand equity than what we were trying to create with a standalone brand within the company. Yes, as a CFO, you look at the waste in the P&L and you're like, this is we shouldn't have done it, but again, that's hindsight. Having clarity why you did it before, communicating what led to the change now, and why are you going back to what your original story was, I think becomes extremely key. And being honest about it, right? At the end of the day, we are all leaders, as we're in the seats that we sit. We need to be authentic, whether it's to the consumer, whether it's to our employees, or whether it's to our investors. So not trying to just spin a story, but actually acknowledge why did you make the change in the first place and why do you believe it doesn't work is extremely key in those moments.
Excellent. I think we might open it up to a few questions. So if folks want to raise hands, we've got a microphone going around.
Hi, Matt Budd. I chair the Financial Executives Networking Group. I'm a recovering chief financial officer myself. I was chief financial officer of an advertising agency, which, as you may imagine, is a wild and crazy business. The question I have for you is, how do you educate your peers on what really works within the company? I found people involved in the actual innovation of a company don't always understand the metrics.
Who wants to take it? Anyone?
I mean, one thing that we do that I love is that kind of top to bottom in the organization, we do post-mortems or after-action reports if you want something that's less final in its name. And that's a good way to reintroduce the metrics. So when you're talking about a pivot that didn't work, small or big, we'll get together as an exec team and we'll just do an after-action meeting on, here's what we saw, here's when we made the decision, could we have made the decision earlier, better, faster? And it's a fascinating insight because you get a whole bunch of other folks staring at the same thing at the same time, which I actually really appreciate. The other thing it does is, innovation is tough to pin down, the source of it, the durability of it. One thing that I believe is that it's fundamentally just about curiosity and openness in the organization. And by doing these after-action reports, what I found is it actually increases the curiosity and openness. It has this other effect of not just educating people, but it allows people a place to say, if this goes wrong, we're going to talk about it in a controlled way versus some other political back channel about where the judgment comes on why this decision was made and made poorly. So I don't know if that answers your question, but it's one technique we use.
Yeah, I think I would add to that, to the annual goal setting process, right? When you are making those trade-offs before the year sets in, these are our short-term goals, these are the long-term goals, and having sort of, to the extent that you can, data that can be measured against those goals and talking about those and to the best you can, monthly, quarterly meetings has helped a lot in terms of this is, taking it back to why you did it in the first place. And this is how you are measuring it and progress against us has helped quite a bit.
In my mind, I think there's a very strong aspect to kind of mentoring and coaching in that process. I mean, if you think it through, if you have innovators and their very business mindset, probably they're somewhere else in creating their own company and running off, right? But the guys who maybe are the innovators but not so strong in business mindset, they bring the innovation, but they need that support. So in that regard, what we do in 6K is we have kind of call it tech steer co, or actually it's more like a coaching and mentorship group. So that means have a couple of executives from different levels. It does not need to be your top level. It can also be one level down, and have them really as a resource group for your innovators in the organization and help them to think through what is the business case, how do you make money, how do you go to commercialization, because that's what these innovators at the end really need, so that you can later then either decide, okay, do I now move that into my 6K next, or do I keep it as more like a incremental product step? So I have made quite good experience with creating such kind of internal resource group and bring high enough kind of caliber into that group. You can't use, let's say, two junior people in that group. Otherwise, it's not worthwhile.
I think we have a next question.
Yeah, hi. My name is Peter Bernat. I'm the CFO of a company called Bay State Milling. We're a 125-year-old flour milling company, so flour that goes into bread and pizza and so forth. So a very old line, traditional piece of the business that we've been doing for millennia, right? People have been milling flour and baking bread for a long, long, long time. And we're trying to be an innovative company, and we have some really exciting stuff. I think we have a couple of things that I consider miracle ingredients that we've helped develop. Read a book a couple of years ago, or a number of years ago, called The Three-Box Solution. And Dennis, I think it was you who mentioned you need to take the innovative piece of the business. It's going to be your long-term growth or your future growth, and jump onto the next growth curve, and you need to carve it out. And so we've tried to do that. We have a group called the Varietal Solutions. And you mentioned, and you really talked about carving it out. I've really struggled when they get up and they make their presentations about progress and spend so much time on their spend versus budget, which is useless in this. And would love to hear you talk, and anyone else, about that carving out and how you're doing it and what you're doing from a metric standpoint. Again, it may be a longer question and not fair given this, but it's such a valuable statement when you have a business and you have an innovative side, and you have to separate them because you can't operate it the same way or measure it or incent it anywhere near the same way you do your traditional business.
And just one pause. We may have room for like one or two more questions. So if anyone has one, just raise your hand now and we'll bring a mic over just to be efficient.
Right, it goes a little bit back to what I said before. On the one side, can you create your mentorship group? But I like to think about this really like it's the startup within your company. So you can really try to drive them also towards the startup process where they have like their Series A, Series B, and Series D funding. So you carve it out of your classical budgeting process where you say, okay, here's your annual budget, here's your annual budget. But you really try to drive them towards the milestone thinking, like what are your key milestones you need to achieve so that you get your next round of funding. And that very often, especially in that stage, a year might be too long or it might be too short, right? Depending on what cycle it is. That's why I would really recommend to take them off the annual budget cycle. You can run that on the background. You will need it because you will need your corporate budget somehow. But I think I like really to treat them similar, like I said before, use different KPIs, also use different processes on how you manage them. Just an idea.
Yeah, that's good.
Any other questions from the group? Yes.
Can you give us some of the advice when there's a circumstance you have to slow down the... Yeah, can you give us some of the advice when there's a circumstance you have to slow down the innovation speed from the CEO?
I throw down
Running
the
too
what?
fast.
Slow down.
How do you slow
Like
down
slow down?
innovation speed
Yeah.
from the CEO?
Funding. I mean, I think, speaking from a startup perspective, it goes back to the resource prioritization and allocation, right? We actually went through this. We set up a separate innovation group, and then we had to fold it back in because of funding considerations. We hope to spin it out again once we go public, but I think, at least speaking from my experience, it really, at the end of the day, boils down to the availability of funding and how fast can you fast track your innovation projects depending on availability of funding.
I would say maybe not so much the slowdown, but I think what you need to be very careful, especially when you create an innovation group, is that you're not ending up with like a basket full of whatever, apple, peaches, and bananas, that you really stay focused, right? At the end, sometimes it's difficult to make the hard choices because not every innovation at the end will succeed or really has a great business case. And sometimes then you have the situation that there may be some sponsors within the organization and for whatever reason they love it and kind of just creates, absorbing resources of the company. And I think that's really where you have to have that kind of internal mechanism and where I think the CFO plays sometimes the ugly role, or has to play sometimes the ugly role, also to kind of be the one who pulls the plug and says, today maybe apples are not so much in favor. I think we heard bananas sell very well, so let's go bananas. So.
And I'd like to add, I think, partly related to the question you asked, I think it's important, and I think it also goes back to the first question we had, it's important to communicate as part of educating the organization that a large percentage of what the innovation team is going to come up with is going to fail. We are going after that one big idea that's going to take us to that next level. So I think making sure that everybody understands that and the right metrics are set. And it's not about presenting how much you're spending every month. That's not what the innovation team is after. It's about what is that next big idea, knowing maybe if they come up with 20, 19 might fail. And that's okay, because that's what we're going after. So I think that's also important to communicate within the organization.
Perfect. Well, thank you so much. Thank you for being a great audience, and thank you to each of our panelists for your contributions. I know I learned a lot.
Thank you, everyone.